We are back. You're listening to The Real Side on GCN Live. Always a pleasure to have you with me. I appreciate the time you're spending with us on the air, in the chat room, texting, tweeting, and being part of the conversation. You know, I always joke about that song. And every time it plays, I just keep thinking about a young kid sitting there spinning a 45 really fast. If you don't know what a 45 is, maybe you're listening to the wrong show. I don't know. Anyway, you know how it is. I love when David Fischer's on with us. I really do. I appreciate his time, and I appreciate his wisdom and his honesty and the information that he has for us. David Fischer joins me, CEO of Landmark Capital. I always appreciate the time when he's on. He's, plain, simple English. That's the big thing for me when it comes to finances. Don't speak over my head. Don't speak finances. Speak English. That's what I understand. Anyway, always a pleasure to have him with me, David Fischer. You know, David, the market's been up and down. I would imagine part of it is because of President Trump over in the international world and some of the deals going on with China and North Korea. It's just sending this thing all over the place. Is this thing ever going to settle down? I mean, what is going on?
No, it's not going to settle down for a while. It's going to take some time to hammer out. President Trump has campaigned on several agendas on making America great, and in doing so, you're going to have volatile markets. We didn't have it so much last year because he was working on some budget things, and now those are done, and we got a tax bill through. Now he's off to, working on trade agreements, and because of that, that shakes up the world. So Monday, first of all, we've been having some volatile markets because this tariffs, the tit for tat, have been going back and forth between the United States and China, and they've been trying to come to some agreement, but they've been putting their heels in the mud. Well, as a result of that, we came to the cliff, and we backed away from that. On Sunday, our Secretary of Treasury, Steve Mnuchin, said 8 simple words: "We are putting the trade war on hold," which calmed, investors. So Monday, when the market opened up, it opened up a couple hundred points because we agreed that we're going to not put into effect tariffs on China, representing about $150 billion in the steel, aluminum industry, and also other Chinese imports. And China put a handout and said, okay, because of that, we're going to lift the $50 billion in the soybean industry, which is great for U.S. farmers. And the other thing that China made as a gesture of goodwill, they said that we're going to increase our purchases of U.S. goods and services. However, though, they didn't mention, Joe, a dollar amount or a time frame, so it could be some hollow promises there. But we got to the cliff and we backed away. That caused some confidence, and the market went up. Yeah, it only lasted a couple of days, though.
Well, it seems like, you get a couple of good days, a couple of bad days. There's no consistency happening. It's probably making the lesser knowledgeable trader, very nervous right now. I mean, I don't know. I don't know enough to know what I don't know. Do you know what I'm saying? I mean,
even the knowledgeable trader is having a hard time in this market unless we have huge, several hundreds of point swings, and they can pick up while the market's doing that. But, the surprises are coming. Like, nobody knew that Steve Mnuchin was going to say what he said Sunday. So traders had to. So the overnight markets, most traders cannot get involved in trading the market overnight. Mm-hmm. And so they couldn't take advantage of the Dow jumping a couple hundred points right at the opening. So this is a big boys market right now because the Dow, using just that as an example, is trading in a small trading range from 23,400 points to 25,900 points. A 1,600 point swing up and down. Has been doing that since January. So it's based upon good news, bad news, and it's once it breaks out of that trend, that trough that it's stuck in, upwards or downwards, then it's going to rally one way or the other, either up or down. But the economy's growing. It's not growing as much as President Trump wanted it to. Last quarter grew 2.3%, but unemployment hit a 3.9%, which is good. But so we have some headwinds happening. I don't know if you heard the news, but New York is having $5 a gallon gas right now.
Whoa! Well, listen, we have almost $4 a gallon gas in California, and they're talking about raising tax again. Although they can't get away with doing it on the gas, right? Now what they're going to do is they're going to do it on mileage. So You're going to have to start writing down your mileage and paying for that on top of it. I don't know. You know, they say over $1. We now pay close to or just over $1 in taxes alone per gallon of gas. I mean, I want you to think about that.
Well, they got to tax us somewhere because we have a huge debt going on, and it's just ever growing. But crude oil is up 16% in the last 3 months, trading at $72 and change. It was yesterday. It's down a little bit today, 71 in the mid 71s. The dollar index, which is, oil is traded in dollars at 94, which put into perspective, 78 is the low, 102 is the high, but in the short term, 90 is the low, and about 96 is the high. So we're approaching a higher dollar index level in the short term here. We could probably see a third quarter, the dollar go down and oil continue to go up. In fact, there was a guy that called the bottom of oil today, a few months ago on Fox News. The day they was on Fox News, he says this is the bottom of the short-term movement in oil. And today, the same guy was on Fox News calling for a $100 barrel in oil. He didn't say the timeline. He says it could happen, $80 a barrel that could happen this year, but $100 is not out of the question, but that's probably going to be closer to 2 years. So, we're going to have higher prices in oil. That's not going to be good for stocks, and it shows inflationary, which means the Fed's going to continue on the path of raising rates.
Yeah, Tesla will love it, but other than that, look, in about a minute we got to go for a break. But I do want to talk about other markets, other investments. You got gold, silver, oil. As I joke with you on a regular basis, planting money in the backyard in your coffee can. People have got to have options, and I think it was funny. I was talking to a guy the other day about stocks and investments. He says, "Look, I don't make a lot of money. I don't know what to do with it." I said, "When do you actually sit down with a finance person? Do you sit down when you're 7.5 days away from retiring? You should do it when you're young, right? I mean, in a minute."
Well, you have to make a plan, otherwise you're going to plan to fail. So, strategy is everything.
David will be back with us in a minute here, right after the break. But the roller coaster ride is a big deal. You need to be paying attention to what's going on. If you've got stocks and bonds, don't do knee jerks. Really, just don't do knee jerks. Just make sure that you've got a good broker that you trust. And if you've got gold, or if you need some coffee cans, I can send you some. But there's nothing wrong with burying some of the dollars in the backyard. You know what I'm saying? Anyway, I'm Joe Messina, your host. David Fischer will join us again right after the break. Don't go far. We are back. Listen to the Real Side on GCN Live. Always a pleasure to have you with me. I appreciate the time that you're spending with me. Let's get back at it. You got any money? If you don't have any money, well, take a listen. Maybe you'll get some money. Maybe you'll learn how to keep your money. How's that? That's even better, don't you think? David Fischer joins me as he does every week, kind of give us a plain, simple English look at what's going on in the finance world. Not just stocks and bonds, but what's going on in the international world that affects your money, what's going on with the money you've buried in the backyard, there's all kinds of ways to secure and make money. David, thanks so much for being with me today.
I like simple English. I don't think I can speak Chinese, so we'll just stick with the English.
At the way things are going, we may have to learn it anyway. So look at you've always talked about a fourfold approach, right? You talk about stocks and bonds, real estate, burying money in the backyard, and precious metals. And, people just don't get how all that comes together. You look at the price of gold, for instance. I don't know where that is today, about $1,300, $1,400 an ounce or something like that. I'm probably off. I usually am when it comes to that stuff. But go ahead.
$1,292.
All right. Hey, it was close. I'm close enough for government work anyway. So there's a lot of times you could jump into these things without actually, buying a whole ounce, or you got to decide what you're trying to do, right? I mean, some people buy gold for an investment. That's not the thing to do. So explain to us less informed peoples.
Well, it is. Gold is an investment, and clearly is also a hedge against currency and a hedge against the unknown. It serves more than one facet. A lot of people pass down wealth using gold. It's a private asset. It's not like a stock, a bond, or real estate that Social Security numbers are tied to it. And I'm not telling people to avoid taxes or anything like that, but there's a lot of reasons why people do invest in gold. It's not just one level. It's multifaceted, and it does. Like right now in the markets, not just gold, there's just a lot of uncertainty. We're at crossroads in many markets. And that's why you're seeing the volatile markets. That's why gold is up some days and gold is down some days. Same with stocks, same with bonds. We're moving into a very uncertain time. And I don't think we're going to be out of that uncertain time for a couple of years. I think things are not going to get better a whole bunch. I think there's going to be certain things that will shine during certain quarters of the year. But I think we're going to hit the wall here in a couple of years because of servicing the debt and the interest rate. That's when you're going to want to make sure that you want to have some gold, because when we hit the wall before, I'm talking about not just a market correction, I'm talking about a financial challenge, a crisis. We're headed towards one unless our country leaders address it, and they're not addressing it. It's pedal to the metal. It's spend, 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 and create a lot of treasuries. So they're doing everything that is just the opposite direction of addressing it, which makes the problem even bigger. So last crisis, stocks obviously went down 40 to 45% for the most. Real estate did about the same. Cash was king, and people needed cash to pay their bills to live off of. And gold the first year went up 50%, offset the losses in stocks and real estate. And when I'm on a multi-year run, we're doubled in less than 2.5 years. So gold served its purpose. It's there to hedge against crises. It's another tool in a portfolio that diversifies it. Should you have all your money into gold? Absolutely not. Just like you should not have all your money in real estate or all your money in stocks. But diversification is a key element. Unfortunately, Wall Street doesn't think so. But, Wall Street, we learned it real well. And people said in 2008 and 9, I'll never go through this again. Well, it's coming again, unfortunately, especially since they're heading this way, not just through government, but through passing laws that happened just recently, here this week, yesterday, that is confirms we are going the same direction we did in 2007. And it's unfortunate we haven't learned this, but so you got to become your own banker, in essence. You got to prepare, and you got to diversify. Now is the time you want to diversify when markets, the whole adage low sell high. If gold has gone through a pullback, and we have a discount that goes on also in addition to this in summer months, typically, take advantage of it. So you want to diversify when the market is calm and not raging. Unfortunately, Americans want to wait till the thing is ragingly clear and buy at the top of a market.
Yeah, we're a very reactionary group, aren't we? I mean, seriously. Same thing. Look, we joke about it. You and I have talked about this a million times. There's nothing new here. But you talk about Bitcoin, for instance. Everybody was all excited, and you got to buy, you got to jump in, you got to this thing's going to hit $1 million a coin. And I just thank God for guys like you around me. They're going, okay, you know what? Yeah, maybe it's not going away, but it's not going to $1 million a coin either. And people jumped on that bandwagon, and now there's a lot of moaning and groaning going on, right?
Yeah, there's a lot of moaning and groaning. Bitcoin is down again. It's not going away, but it's not going to be a major part of a financial portfolio. It's trading at $79.46 today in the market. So I mean, it was almost $20,000. So, and that was just a few months ago. It became overly inflated. Now it corrected. There's been bubbles. Bitcoin was in a bubble at $30. Bitcoin was in a bubble at $1,000. Bitcoin was in a bubble at $19,000. Is Bitcoin in a bubble today? I don't think so. But it's the demand. People are scared when a market drops as much as it does and it goes up as fast as it does. So you got to come back to the fundamentals and say, if I'm going to invest in something like that, you should be investing a small amount because it's highly speculative, very volatile. It has liquidity, but it's very volatile, and you're going to pay the swings of the market, and it might not work for you. It might work against you.
Yeah. Again, what about cash? People ask me all the time. I don't know what they're asking me for, but they talk about precious metals again, stocks, bonds, and cash. Do I want to keep cash around the house? Why do I want to do that? If the dollar takes a nosedive, wouldn't I want something else? Well, the dollar's never going to be worth zero, right?
No, that's a fallacy that unfortunately gets perpetuated in my industry that causes people to be scared into buying gold, saying, "Oh, the dollar's going to go away." The dollar's not going to go away, just like the British pound that was once the world reserve currency didn't go away. Meghan and the prince got married today. They paid for their wedding in British pounds. I have some British pounds. When I went to Britain here in 2014, I used British pounds. The British pound didn't go away after the fact of it lost the world reserve. And if the dollar loses the world reserve currency, and it will eventually, but not next week, not next month, and not next year, it's going to be a timeline. And there is a process that we are going the same direction that the British pound is. But you want to have still some money in cash, because what would happen, and this sounds like I'm talking on both sides of my mouth, but this is real. They just passed portions of the Dodd-Frank Act that could cause another 2007, that repealed the portions of the Dodd-Frank Act, that could cause a whole nother 2007. But this time, we still have in the Dodd-Frank Act the seizure of your money, where they can seize your bank account. If that did happen, and there's no forewarning of it, it just happens, they flip the switch, you can't get your money, you're going to want to make sure you have some money in cash outside of the system. That's all. It's an extreme measure. It's just like saying, I don't ever think my house is going to burn down, but I'm going to have house insurance, homeowners insurance. I mean, it's required in a loan, but it's also a wise thing to do.
Right.
So you have it just in case. Is it going to happen? Probably not. I mean, I have life insurance on myself, and so does my wife. I mean, not because we're planning on dying next week, and we're very healthy people, but just in case. And that's what having cash outside of a bank, a little bit being, is a very broad statement, a few $1,000s, maybe $1,000, depending on your lifestyle, how much you spend on a monthly basis, maybe a little bit more than that. But it's just a wise and prudent thing to do.
Oh, yeah, no, being out in front of something should never be something that you don't think about. I mean, I tell people all the time, what happens if friends of mine work in the construction industry, sometimes they don't have any work for 2 or 3 days. That's a big chunk of change for those guys. Look, we got to go for a quick break. When we come back, there's a lot more. I want to talk about the Petro one, where most people probably still haven't been paying attention and don't know what it is. And really, some of you, do you understand? Have you guys figured out yet that China's been working underneath or behind the scenes, if you would, to become the power? And the Petro is what they're using now, or trying to use now anyway. The Petro is what they're using now, or trying to use now, to pay for oil from the Saudis and others. And they're not supposed to. The American dollar is what's supposed to be being used. I'm Joe Messina. We'll hear more about that on the other side of the break. David Fischer will still be with us. Don't go far.
I say this calls for action, and now, nip it in the bud.
Baby, it looks like it's gonna happen. Baby,
we are back. This is the Real Side on GCN Live. Always a pleasure to have you with me. 855-REAL-JOE. 855-732-5563. Listen, get involved in the conversation. Okay? Pay attention. Take notes. If you're driving, don't be stupid. Don't take notes. You can listen later. Anyway, I'm Joe Messina, your host. You know who's up. Guy I love to have with me on a regular basis. David, again, as usual, thanks for being with me. And, man, I tell you what, finances, can you see why the average person who doesn't work in this every day gets thoroughly confused and buried by, the market and the gold ads and the silver ads and the oil? I mean, just crazy, right?
Well, that's why, it's good that you have people like myself on your program to make it simple. And, we can put it all in one package and, they can call my company and they can get free consultation, get those questions that they keep sending you that you don't have the answers to. They can get them from us and build a relationship. There's no pressure, there's no obligation, but that's there's a lot of people that do have questions, and we aren't able to answer them all during the time frame that we have. So I encourage them to call our company, and we can help them out.
Yeah, it's funny how people are just simply afraid. They're even afraid to ask the question because they feel they don't want to sound stupid. But I'll tell you what, when it comes to the markets, when it comes to this stuff, you can't sound stupid. Nobody's an expert at everything. You're good at what you do, Mr. Daily Worker, and Dave is good at what he does. So you want to head over to landmarkgold.com. That's landmarkgold.com if you have the information. If you want to get some more information on this. And then you can do it the old-fashioned way. Pick up the phone, which is probably the best way, 844-715-7311, 844-715-7311. So, David, let's you were talking during the break about a new Dodd-Frank. They didn't do away with it, but they modified it. And people are screaming that now that what they've done is they're going to allow small banks to go back to the old practices again. I don't know if I buy that, but explain it to us.
Well, yesterday the House passed a plan to roll back the banking regulations that were passed in response to the 2008 financial crisis called the Dodd-Frank Act. Now they're sending this bill to the president to sign, and more than likely he's going to sign it. The measure is nearly certain to become law. It was passed in the House by 258 to 159, and nearly all Republicans voted for it, and 33 Democrats voted for it. So the Senate did approve a bill in March with bipartisan backing, and the House approved it a year ago. Those were very aggressive bills, so they had to revise it and come to terms, and that's what they did with this bill. So what the supporters of the bill says, it provides relief for community and local banks, whether they're under Washington's regulations or not. We're referring to like credit unions, things like that. But the critics are saying it just opens the whole financial system up again to abuse and risky behavior on banks, which is what caused 2007. And they're saying it's the same thing that brought our country to its knees now can continue to do so in the future. So it's a very opinionated thing, kind of like, depending on there are some good things to it. There's always some good, a silver lining in it, but it does put back into effect where big banks can do some of the things that they caused 2007. It does allow that to happen again, unfortunately. So I think this is the first step of many in retooling the Dodd-Frank Act. There's still some things that are just in the Dodd-Frank that I think should go away. They didn't modify the Consumer Financial Protection Bureau at all. It still has all kinds of power. They didn't take away the bail-in side of things where they can seize citizens' money. I think that should be resolved. So there's some major fundamentals. I don't know if they're ever going to address them. I hope so, but they open themselves up for some more risk. I'm
always amazed at our government, if you would, where they go in. Sometimes they have sneaky aspirations. Sometimes they're really trying to do the right thing, but they never go back and check this stuff out. They never go back to see, what effect it's really having and what they need to do to tweak it. There's many on the left right now, or many that are very suspicious that say they're doing this stuff just to make sure they take care of their friends. And I don't know if I buy that. Give me your personal opinion on it.
Well, it's going to be there. The benefit of it is it should open up lending practices on smaller local banks and farming communities and small towns and cities, and it should spur economic growth. And that's my hope that it will do that. So there's some of the restrictions that were erroneous that went on banks because of Dodd-Frank. Some of them were good and some of them weren't. They caused no lending to happen at the level it should have happened. This bill takes that and rolls that back. So I think that's a really good part of it. Whether they're getting, grease underneath the table and saying, hey, you get this for us, I'll scratch your back financially. I'm sure there might be, I would hope there wouldn't be a lot of that going on, but there probably is, unfortunately. But the benefit is it should spur some economic growth.
Yeah. Last week you were talking about the debt of our country becoming even more unmanageable. It doesn't, and I'm listening to what you've said over the last year and longer. And you look at this, and I'm saying to myself, they're really doing absolutely nothing to curb the debt. They talk about saving, and I realize every nickel helps. In this case, it's billions of nickels. But every billion helps, if you would. But it doesn't look like they're taking a serious swipe at fixing this.
If you put the budget in what you call a pie chart, Joe, it's just insane what is happening here. 23% goes to Medicare, 27% goes to Social Security, 21% goes to servicing our national debt. So every dollar you send to the government, 21 cents of that just services the debt. 10% goes to Medicare, 7% is other mandatory spending like farm subsidies, food stamps, general retirement for government employees. 5% is the deficit, so we have 6% left over for discretionary spending, a little bit towards the wall, a little bit towards this, a little bit towards that. And this is based upon a $3.3 trillion revenue stream that came in last year. Here's the kicker. They want to pass $1 trillion spending bill. There's no gap there. I mean, so we have a 6% fudge line here, 6%, that's all of what we can move to increase to pay that debt down, and that would bring that servicing the debt would be down to about 13%, 15%, excuse me. We would still 15% of the debt of the money coming into our country would service the debt. So we're underwater. And now that they're raising rates, the servicing of the debt becomes more challenging. And now that they're creating more treasuries to service the debt, that becomes more challenging. But this was all done to stimulate the economy. And I said years ago, it's not going to work. It didn't work under Reagan. It's not going to work under President Trump, unfortunately. And now we're seeing the results of this. In fact, the Congressional Budget Office coming out and independent entities that are non-partisan based are all putting the numbers together and just say it's going to turn into a mess about 2 years from now when rates are much higher, about 2% higher than they are right now, and the debt will be, trillions of dollars higher. And the Fed has unwound their balance sheet. We're going to have a financial calamity. Unfortunately, it doesn't make any sense that we're not talking about this, but you have to understand human behavior in the government. They don't talk about the debt ceiling until a week before we got to raise the debt ceiling. They wait to the 11th hour.
No, listen, I'm with you. I've been watching what these guys are doing, and nobody really wants to I mean, I'll give what's his name, Rand Paul, some credit because he's in there screaming, "Wait a minute, when are we going to actually tackle the debt numbers?" Now, you only got about 2 minutes left, so I know you want to get into your white paper. I want to get into your white paper. People need to get information. I love your title. Time is up. Which bubble will burst first to trigger the coming great deflate? I just pictured this big balloon just crumpling down to nothing. Tell us about it.
Well, it talks about different bubbles that are forming, and we've talked a little bit about maybe crude oil is forming a bubble. I don't know. That's not in the report, but there's different things that once they pop, it starts to cause a chain reaction and pop another bubble that's a little bit bigger. 1 or 2 bubbles away from popping, that causes a huge financial change in our environment, and that environment would not be a positive one. So this is why we say get the facts, get this white paper. There's 24 major things in this white paper that talks about how China has set up their currency. Another thing happened that's not even in the white paper we're going to talk about next week on your program, that London is doing the metal exchange. That's very historical for China. And it is happening. Things I've been saying is happening is now being confirmed in the news media on major levels as happening. So get the facts, call our company, go to our website, learn what's happening. Wisdom and knowledge is power.
You got to use your brains. You really just have to use your brains with all this. Hey, I'm Joe Messina, your host. Always a pleasure to have you with me. Check them out. Check them out. Landmarkgold.com, landmarkgold.com. You really do want to check them out. You really want to get some information before you go ahead and do anything stupid, before you get involved in this. And look, there's other people out there that have used his services. I wish I could put up a little, a chat room or whatever just for him alone and say, he'll do you right. Bottom line, he'll do you right. So Anyway, I'm Joe Messina, your host. Always a pleasure to have you with me. 855, write this down. 855 Real Joe, 855-732-5563.